everyone, welcome back to XXCRYPTO. My name is Boris, pro trader and analyst. In this video, we're going to talk about another very important subject, which is choosing the correct trading style. So I want to ask you guys and girls a question. So do you prefer trading based on your gut instincts and your personal observations, or do you prefer a more structured, rules-based approach? There really is no right or wrong answer. It depends on your style and your preference, really. So really there are two distinct styles of trading in crypto and just in the trading industry overall. That is what's called discretionary and systematic. Now, let's break down what is discretionary trading. So discretionary, it's as the word describes itself, it's more based on your own discretion. It's based on more personal observations. It's based more on feeling and even intuition. And I've even heard a very famous trader once say that trading is almost like an art form. So when you're trading discretionarily, you're perhaps, let's take a look at the chart in back of me. You're just looking at this chart of Bitcoin right now. At this current point of time, it's trading at $87,000 or so. Maybe you'll be watching this in 5 years and it'll be trading at $500,000 hopefully, or even $1 million. But anyway, let's say you're just looking at the chart and we see an uptrend, a pattern of higher highs and higher lows. Or you could just see, or it really depends on your perspective. Like this chart could be seen as just going sideways, and some people will say this is an uptrend and Bitcoin's going to go up soon. So that's what's called, what I just described, that's just discretionary. Like it's really up to the eye of the observer or the eye of the trader, what they really see in the chart below me or behind me, not below me. So another thing, or the other things that go into discretionary trading are things like support and resistance zones, supply and demand zones, chart patterns, like I said, like drawing trend lines, drawing horizontal support and resistance, and really just looking at patterns. And I even know traders that just go off of their personal intuition, which is very, very difficult to do. I myself, 5 years into trading, I'm just starting to get more of an intuition about the markets, but I never trade based on my intuition alone. Me, myself, I'm personally more of a systematic trader. So we will dive into what is systematic trading now. So systematic trading is really about focusing more on very strict rules and having a more structured approach to your trading instead of relying on chart patterns and but subjectively drawing support and resistance zones and supply and demand zones. And if you guys don't understand what these concepts are, support and resistance, supply and demand, and trend lines, we'll go over this in later modules. For now, just be aware of these two different trading styles, discretionary and systematic. But what systematic relies on is actual backtesting, and backtesting means actually going through different sets of data, analyzing past price history, perhaps using an indicator. So again, behind me, it's just a sample chart. Down below the price chart of Bitcoin, there's an indicator. It's called the MACD, aka the moving average convergence divergence indicator. What does it do? What does the indicator do? It's really not important. I don't personally use it, but I do use a lot of indicators in my systematic strategy, because with indicators you can actually go throughout time or throughout the past history in time and look at actual data and see what a certain indicator would tell you about let's say volume or momentum or just volatility. These are all different variables we can measure in trading and in crypto. And with that, you can, once you have a set piece of historical data you can start to form a strategy. So essentially, systematic trading relies on, like I said, strict rules. Really is about using a lot of indicators. It's less reliant on chart patterns. It's not even reliant on news. It doesn't really take your subjectivity into account. It's really just finding the right set of indicators or tools that give you actual historical data that you can then go forth and actually build a strategy based on the set of indicators that you choose. Now we're going to actually go into this in future modules. I'm actually going to show you guys how to pick the right indicators, what kind of indicators you need. You might have heard of indicators like the RSI or the MACD that I just described behind me, or different moving averages like EMAs and simple moving averages, and they're like literally in the TradingView library there's tens of thousands of indicators, maybe even 100,000. So it can be a bit tough to figure out what kind of indicator system to use. As the term goes, it's a systematic approach. So you're going to be using a system of different indicators in order to build a strategy. Now, although I am talking a lot about systematic trading right now, you could still be discretionary and still be profitable. I just prefer a more systematic approach. I'm still very familiar with what discretionary trading is. I understand what support and resistance is. I understand supply and demand zones. I understand many of the chart patterns. And I know many very successful traders that actually do use all these methods. And like I said earlier in the video, it's really up to you what you want to do. And we're going to break down at XXCRYPTO what is a good discretionary strategy and the concepts that go behind it, and also what is a good or how to build a good systematic strategy. So I'm really going to focus more on the systematic approach because that is my style, but we will also have other traders describing their discretionary strategies. And lastly, what I want to say before we go deeper into what is systematic trading is you really don't have to pick one or the other. You can actually pick both methods. So although I do primarily rely on my systematic approach, you can also put some discretionary elements into your strategy. So like I said, I do use more of a systematic approach, but at the same time I do take into account like maybe an important price level, which is more like I suppose classical TA or classical technical analysis. So you could also use, there's a third method, it's called the hybrid method. So you can use 50%, 50% of your strategy is going to be systematic, and then 50% of your strategy is going to be discretionary. For me personally, I'd say it's about 80% systematic and 20% discretionary. So you can use elements of both trading styles. Again, this is probably a lot to dissect right now, but we're going to go into what exactly is a solid discretionary strategy, and then what is a solid systematic strategy, and how to build those kind of strategies in later modules. For now, I'll leave you with that, and we'll continue on this journey together in the next video. See you soon, and be sure to click the like and subscribe button.